Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 19th, 2024, and we're diving into FedEx's latest earnings report for the second quarter of fiscal year 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. FedEx has released some intriguing numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. FedEx reported a revenue of $22 billion for the second quarter, which is slightly down from last year. However, the adjusted earnings per share came in at $4.05, beating the analyst forecast of $3.90. John, what are your thoughts on these figures?
Indeed, the revenue is slightly lower compared to last year's $22.2 billion, but the adjusted EPS of 45 cents is a strong performance, surpassing the forecast. This indicates that FedEx is managing its costs effectively, despite the challenging market conditions. The operating margin of 6.3% also reflects their focus on operational efficiencies.
Strategic initiatives and share repurchase. FedEx has been active on the strategic front, completing $1 billion in share repurchases this quarter and planning an additional $500 million. They also announced the separation of FedEx Freight into a new publicly traded company. How do these moves position FedEx for the future?
The share repurchase program is a clear signal of confidence in their financial health, with $5.0 billion in cash on hand. The separation of FedEx Freight is a strategic move to streamline operations and focus on core competencies. This could unlock value for shareholders and improve operational focus.
Operational efficiencies and future outlook. FedEx has revised its full-year earnings outlook, now expecting an adjusted EPS of $19 to $20. They've also reaffirmed their commitment to the DRIVE program, targeting $2.2 billion in cost reductions. What does this mean for their future performance?
The DRIVE program is crucial for FedEx's long-term profitability, focusing on cost efficiency and network optimization. The revised EPS forecast, although lower than previous estimates, still shows resilience in a tough market. Their capital spending of $5.2 billion indicates ongoing investments in modernization and efficiency improvements.
CFO Insights. CEO Raj Subramaniam mentioned the transformation of operations and the focus on creating a more flexible network. Meanwhile, CFO John Dietrich expressed confidence in earnings growth despite demand challenges. How do these leadership insights align with FedEx's strategic direction?
Both leaders emphasize transformation and efficiency. The CEO's focus on operational flexibility is key in adapting to market changes, while the CFO's confidence in earnings growth highlights their strategic cost management and revenue quality improvement. Their prudent capital management approach is also reassuring for investors.
Key takeaways. In summary, FedEx has delivered a solid performance this quarter with a strong adjusted EPS and strategic initiatives like the FedEx Freight separation. Their focus on cost efficiency and prudent capital management positions them well for future growth. Thank you for joining us, John.
Thank you. It's been a pleasure discussing FedEx's performance. They are certainly making strategic moves to navigate the current economic landscape.
Thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial insights. We'd love to hear your thoughts on FedEx's performance in the comments below.